Gold is off its highs as US markets are relaxed about the US government shutdown. Australian gold exports drop in August after a safe haven boost in July, and Australian household spending growth weakens. It's coming up in our 5 Things in 5 Minutes on Friday, October the 3rd. And then in our deep dive interview, ANZ Economist Maddy Dunk looks at what's driving Australia's housing market after a bumper September.
Rate cuts are definitely going to support the housing market moving forward. We're yet to feel the full benefit of those 3 rate cuts that the RBA has already delivered.
But first, in 5 and 5 with ANZ, global markets are meandering and relaxed in the face of the US government shutdown. Meanwhile, key data in Australia yesterday included August household spending, which showed the spending recovery lost momentum, up only 0.1% in the month. ANZ economist Aaron Luck says soft goods consumption led the weakness.
Services, on the other hand, rose 0.5% in the month, and in annual terms, we are still seeing that trend where services spending is growing faster than goods consumption. We also saw growth in discretionary spending slowing down a little bit, and essential spending also fell for the first time since December last year.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was flat and the Nasdaq was up 0.3% after a good result from Tesla. The 10-year US Treasury yield fell 2.3 basis points to 4.085%. Gold fell 0.7% to $3,869 an ounce. West Texas oil futures fell another 1.9% to $60.63 and a barrel. The US dollar index rose 0.2%. That saw the Aussie dollar fall 0.3% to 65.94 US cents, and the Kiwi was flat at 58.16 US cents. Number 2. Aaron says the Reserve Bank of Australia has been keeping a close eye on consumer spending as it progresses through its rate cut path.
They have said recently that consumption has been performing better than what they were expecting, and that if this trend continues, we may not see many more rate cuts to come. On Tuesday's post-meeting statement as well, the board noted that the recent data may suggest that households have become more comfortable spending. Yes, today's data was relatively soft, but house prices have been picking up. Disposable income is improving as well, and we still haven't felt the full impact of the rate cuts so far. So at this stage, we're still expecting a gradual recovery in consumer spending.
Number 3, Australia's trade balance in goods fell $4.8 billion to just $1.8 billion in August, its lowest since June 2018. ANZ economist Sophia Ngala says the drop in non-monetary gold exports led the fall.
That export category nearly halved in the month of August relative to July. But this is a pullback following that all-time high in July for non-monetary gold exports, which was supported by safe haven demand for gold amidst trade uncertainty in July. Also looking further, resources exports fell, driven by an over 8% decline in other mineral fuels, which includes LNG, while metal ores and minerals, which includes iron ore exports, rose just 0.2% over the same period.
Number 4. Sophia says that fall in non-monetary gold exports led a big drop in goods shipped to the US in August.
Goods exports values to the US declined for around 44% in the month and came to $2.6 billion. That's slightly above the average that it held over Q2, which is $2.1 billion. That was also well below the average that it held over Q1, which was impacted by front-loading ahead of US tariffs at the time.
Number 5. South Korea's headline inflation rose to 2.1% in September from 1.7% in August as the telecommunications fee cut ended and food prices rose. ANZ economist Crystal Tan says inflation is set to stay near the Bank of Korea's 2% target.
So from the Bank of Korea's perspective, the inflation picture does support the case for a resumption of rate cuts, especially when growth is still below potential. Now, the tricky part is that financial stability risks are still elevated because property prices in Seoul have continued to rise. So it is the property price element that is presenting a challenge to further easing rather than inflation.
Crystal Tan there. Now, in our deep dive interview, ANZ economist Maddy Dunk looks at what's supporting Australia's house price growth after a bumper 0.9% lift in capital city prices in the month of September.
We're seeing that listings are still very low. So you've seen a bit of a pickup in new listings in Sydney and Melbourne. But if you look at total listings, they're still 15% lower than they were this time last year. And they're about 25% lower than what's normal around September. And they're particularly soft in some of those smaller capitals. So Perth, Adelaide and Brisbane, we're seeing that new listings are down more than 20% compared to that 10-year average for this time of the year. And total listings are around 50% weaker than that 10-year average. So that is, I guess, flowing through into a very tight housing market and putting upward pressure on prices, particularly in those smaller capitals.
Is that likely to be the main driver behind these higher house prices, or is it a matter of credit getting flowing again, the RBA rate cuts?
I think rate cuts are definitely going to support the housing market moving forward. We're yet to feel the full benefit of those 3 rate cuts that the RBA has already delivered. And generally what we see in easing cycles is that housing market do pick up steam. But having said that, the level of listings is definitely keeping the market tight. So you've got that supply-demand imbalance there where there's not much stock on the market. And we're seeing that auction clearance rates are pretty strong at the moment because people are snapping up those properties that are available.
Now, we've also had building approvals data in recent days in Australia. What have we seen there?
We saw a fall in building approvals in August, and that follows a soft number in July as well. So we've seen a couple of weaker months for building approvals. That's mostly been driven by unit and townhouse approvals. Now, these do tend to be a bit more volatile, so they can be jumpy from month to month. But over the past couple of months, there has been a bit of a downturn. If you look at the annual growth numbers, though, we are seeing that they're still positive. I would say that they're only slightly positive, up 3% compared to this time last year. Now, unit and townhouse approvals are about 16% higher than this time last year, but you wouldn't want to read too much into that given the volatility in that series.
And then just looking back at those capital cities and house price growth, do you think that strength that we saw in September can continue through the rest of the year?
Well, if you look at a lot of the forward indicators, things like auction clearance rates, for example, they do suggest that the housing market is going to continue to look pretty strong over the remainder of this year. Sydney in particular looks like we're seeing a bit of a pickup in momentum as you would expect in an easing cycle. And as we move through the rest of 2025, you should also see listings pick up a bit. So generally, we see that the spring selling season is when a lot of the action happens in the market.
Maddy Dunk there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, October the 3rd. Catch you next week with analysis of whatever comes out of the US economy from a shutdown US government. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.